Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's also Fed Day and February 1st, Wednesday here. So let's jump right into it. We just got a couple economic news releases scheduled for today, but a big one, which we'll talk about in a minute. We'll start with the ADP employment number. We had 151,000 jobs created back in December, and it came in at a pretty whopping number here in 246,000. So private job sector had a really good number here, jumped up about 100,000 more than they expected. There were actually kind of a lot of whisper numbers were in the 150 range, figuring it would be about the same as December, but it jumped up to 246,000. Now tomorrow we'll get the weekly jobless claims, and then Friday we'll get the numbers from the Bureau of Labor Statistics, which will be the main numbers we're looking for. But this is obviously starting off the week pretty nicely, or at least middle of the week here, keeping that momentum going here. Also, we got some manufacturing data here, which is the ISM manufacturing. We got this one, and we usually get the market PMI, and of course, the different regional areas like Chicago PMI and Philly Fed and stuff like that. But this one starts off with the previous reading. We usually get about 2 of these per month. So the previous reading came in at 54.5, and a forecast was supposed to go up to 55.4% and exceed that to 56%. So manufacturing seems to be improving. It seems to be showing well, which is obviously good news. However, on the construction spending, we had a nice month in November at 0.9% increase in construction spending. Forecast was supposed to be go up 4.2% in December, but it went negative. It contracted in December negative 0.2%. So there's a little pullback back in December compared to especially a nice little spend in November here. We'll kind of see. Obviously, we're going to probably expect to see this going up, especially with Trump's announcement talking about trying to rebuild infrastructure. So I would suspect with that talk, and once it gets implemented, we'll see construction spending going upwards. And then later today, about 11 o'clock Pacific Standard Time, the Fed will give their announcement for any rate hikes, which we pretty much expect no rate hike this year, or this month, this meeting. But it will be interesting to see what they're going to really be looking for is obviously the wording in there, see if there's any change of wording, but they want to see as to when the next rate hike might be. If it might be in March or could be in June. There are some reports that are coming out that they feel that the Fed's starting to get a little dovish, so the next rate hike may not be until December. I'm sorry, not December, until June. But there's also some people that think that could be, if we keep seeing these good reports coming out over this the month of February and first half of March, maybe March might see a rate hike as well. So they won't be meeting again until March 14th and 15th. So again, we'll have to kind of wait and see what they do, but this will kind of give us as to hopefully a little insight as to what they're thinking when they're projecting possible rate hikes. So stay tuned. We'll expect some possible volatility later this afternoon here. Stock market's mixed now. It started off pretty nicely this morning. All the markets were up, but since then the S&P's pulled back a little bit and dropped. It all took a big spike because Apple came out with some really good numbers last night after hours, and it kind of carried into this morning. And the good news, they had really good earnings reports, and of course they got reserves, cash on hand, basically at $246 billion. Amazing that anybody can have that much kind of money. Basically probably more than a lot of banks out there. So anyways, that's just 2 cents there. Be prepared. Again, a lot of volatility going to be happening with these earnings reports still being released here. As well as we got the data this week, so we got a lot of data going on. Next week will be a lot lighter in terms of data going on there, so we'll be taking probably a cue for any earnings reports that may still be released. So let's take a look at the bond market. Hopefully you took advantage of what I said. I says yesterday when I gave the report, we were just touching at the 50-day moving average. Told you it's been a very difficult ceiling for us to be able to break above, and if we do, it doesn't stay long. It's usually within the next day or two, kind of like illustrations along here, since we broke below it, and it's been really kind of resistance. And I says you might want to look at locking in if you have any interest rates floating, take advantage of the pricing. And of course, like the day before, it dropped quite a bit. So we were up about, I think, 6 basis points or 3 basis points for what we left out the previous day. So we kind of started resting on here on the 10-day moving average here, and that's where it kind of basically closed. But we did get pushed down, and then today we got pushed down even further. Right now we're down below the first level of support here, our support level, and right down below that, we're down currently about 25 basis points, which leads to worse pricing than when we left off yesterday. So, all right, folks. So just be a little cautious again. As I warned, there's going to be a lot of volatility, and right now forecasts are showing pretty good numbers here, and we could see continue decline rates going upwards again. So decline the MBS and then rates rising. All right, again, just be a little cautious. Hope you guys have a wonderful day. If you guys do want to get more information throughout the day, just come over to Twitter. I'm at Mike Bjork on Twitter, and just stop by there, and you can see my posts throughout the day as market happenings. All right, have a wonderful day. Thanks again for watching. We'll see you guys tomorrow. Bye-bye.